Right, how are we doing, guys? I'm just going to be talking you guys through the weekly breakdown, what we're going to be expecting on GJ and gold as well. So it's going to be a little bit of a top-down analysis as well as what we can be looking at throughout the week based on the higher and the lower time frames. So we'll start off with GJ. What we're going to be looking at on GJ, to start off with, we'll do the market structure, and then we're going to obviously locate some zones that we can trade within, as well as just looking at the higher time frames. So obviously here we are on the weekly, and see what we can basically take out of the weekly and then also the daily time frame. So if we look at the weekly, obviously we are bullish in market structure. Our previous weekly candle did close bullish, although the end of last week was extremely bearish. Friday was a very bearish day. You can see that the weekly candle did close bullish, giving us bullish market structure on the weekly. We'll come back to that. If we look on the daily, we are still bullish in market structure. This was our high point which created the high. We did not get a candle close below that point, nor did we exceed the high. So we are still bullish in market structure. On the daily, if we look at the 4 hour, our market structure in the 4 hour has also remained bullish. This was our high. We look for a 2 or more candle pullback which created that high. You can see these are all 1 candle pullbacks. There's no 2 candles in a row here. So here is our first 2 candle pullback. So therefore, where we will flip structure, we always take the bottom, will be this point down here. So although we did have a very strong bearish push towards the end of last week, we have maintained that bullish market structure on the 4 hour. If we then drop down to the 30-minute time frame, you can see this is where we do actually have some bearish market structure. This was our high originally. These were all pauses. You can see these are not 2 candle pullbacks. Here is your first 2 or more candle pullback. Did we exceed that point? Yes, we did, making this our new low and this the point which created that low. So we will only be bullish above this point up here, and we are bearish because we created that new low. So until we create a new low, then this will become our point of structural transition. So at the moment we are currently 3v1 bullish, although we did have that very strong push. Now if we go back up to the higher time frames, you can see that towards the end of last week we obviously rejected this resistance level. It is a weekly resistance level, so a very strong resistance level. What this could then indicate to us is that we are going to reject this level and start pushing bearish and filling this range. As you know, we are still trapped in this overall weekly range. You can see we haven't managed to break out of there. You can also see based on the monthly time frame, last month we did form resistance, and now this month we have broken the high of last month, but we are now rejecting that point. So we're either gonna towards this upcoming week start continuing bullish, fill this wick first and breaking these highs and finally escape this range, or we're just going to come back down to these sorts of areas, this weekly level of support. Now we're going to drop down to the lower time frames. You can see on the daily time frame on Friday we also formed resistance on a previous level of daily resistance, something very important to look at. You can also look at where we rejected based on coming down. You can see we wicked down into this level of daily support, so we also rejected that as well as this daily support. So again, based on the higher time frames, we're in a very tricky situation. We can both go up or down. Obviously we have the daily resistance and we are also rejecting daily support, so it's very hard to tell based on the higher time frames. If we go to the 4 hour time frame, you can see where we rejected on the 4 hour is obviously previous level of 4 hour support, and then we obviously formed some 4 hour resistance with the last 4 hour candle of last week. So what I would be looking at is obviously marking out some areas to look at possibly taking some trades in. If we are going to be looking at continuing bullish, we would obviously want to fill this 4 hour range. So we'd want to start moving on the lower time frames back up. We'll obviously identify those zones on the lower time frames. If we are to continue bearish, we would obviously want to get down. I would say get a candle close below this 4 hour support level. You can see if we break below this level of 4 hour support, we have these clean 4 hour candles to trade into. However, on the lower time frames, based on these wicks, I'm going to suspect that there is some 1 or 30-minute support within that, but let's just drop down and see. So you can see here we do obviously have these support levels. So what I would do based on looking at if we're going to be continuing bearish, I would shift this down to this sort of level. You can see if we break through this support, then we have clean candles to the left down to about this 155.707 level. So that's going to be about 30 pips worth of range. So it's going to be a solid 30 pip trading range. That's going to be if we are looking for sells. At that point, we will also have a very bearish start to the week. And if we look on the 4 hour, we won't quite have our 4 hour structural flip, but we will still be very bearish to start the Monday off as well as the week off. If we are going to continue bullish based on the 30-minute time frame, you can see we're going to have to go down to the much lower time frames to identify resistance levels. You can see based on the 5-minute, we have a resistance at 156.842, which on the higher time frames obviously is not hasn't formed resistance because that happened quite a while ago. And we can see that if we do start reacting at this sort of zone, it is a previous level of support. So if we start forming some resistance at this point, we can then come back down to this level of support and then further continue bearish. But the only problem with that is obviously if we are taking sells, we are still in that 3v1 market structure, so it's going to be highly risky to be doing so. What I would suggest is obviously waiting for some resistance to form. I'd like resistance to form at these sorts of levels, and then either what we're going to do is wait for candles to close above that resistance and then clean moves down, mean possible clean moves up. So we're going to want to get up to this sort of level again. That's if we are going to continue bullish. Obviously, if we're going to continue bearish, I'd like to see resistance form at this previous level of support. And then what that indicates to us is a break and retest. So retest the support level, turn it into resistance, and then further continue back down to retest this low and possibly then create new lows. And that's where we will break through our 155.979 level where we've identified previous levels of support. That's why we are forming support at this level. And then if we manage to break through that, then we have some pretty clean candles down to 155.719. These are my thoughts for the beginning of the week on GJ. So yeah, very straightforward. You can see we are bullish in market structure, so it would be nice to see some resistance form at these sorts of levels, break through the resistance, and then retest these sorts of areas. That's if we are going to maintain that market structure. If we're not, let's see possible retest of this low and then further lows created, and we can continue down respecting that weekly level of support. Let's move to gold quickly now. So we are going to start off by first identifying the market structure on all our time frames. So you can see on the